everybody. This is Gary Smith with Nectar Bridge. We provide back office support to small businesses, help with accounting, operations, and software to visionary business owners who want to stay out of the weeds. This is the Nectar Bridge Huntsville Biz Talk podcast. We have an amazing announcement this time. We can now offer tax and advisory services powered by RMD Consulting and Advisory in Huntsville. None other than James Jackson, CPA, who is my guest today. James, tell us about yourself, your firm, and what kind of clients you like to work with.
Hello. Yeah, I appreciate you having me on. And I serve primarily real estate investors, brokerages, and higher net worth individuals, as well as small business owners. Yeah, I've been a CPA since 2021. I have to think about it a bit. I've been in the industry since 2018, and we offer tax planning and advisory service as well as preparation services for businesses and individuals with business activity. And I'm always happy to help out anyone, but I find that that's where most of the value is, working with those type of clients.
Okay, great. So kind of a general question, but why does a small business need to work with a CPA? Why can't I just fire up some spreadsheets and just figure it out for myself?
Yeah, I've been preaching this, as you can imagine, since I've started, but it's because earlier in my journey, I was mostly doing tax services, and I was having people bring so much information in. I know we were talking a little bit about, before the podcast, we were talking about a client that I actually met with earlier today, going through stuff, and he doesn't use an accounting software, excuse me. And so you're pulling information from a bunch of different places. There's really no clarity on what's going on in your business. There's no clarity on what are your returns actually looking like? And usually, a lot of these people who don't have accounting software systems and policies in place, you're not going to understand your business really until tax time. And, I feel like that's kind of a risky way to run a business because, you could have almost a full year before you really realize that things are headed downhill. And a lot of times, if it's earlier than that, it's because there's cash flow problems, which is a whole another rabbit hole we can get into about the value of these services. Because a lot of my work, so my firm, we provide a lot of the accounting, outsourced CFO services for some clients, and then a lot of tax stuff. And I think cash flow planning is a huge area where I didn't realize that people had such a problem planning around cash flows and making sure we can run payroll this week.
Yes.
So it's stuff like that keeps business owners up at night. I think I mentioned to you previously that my kind of tagline is that I take the pain and chaos out of tax season. But I also want to take the pain and chaos, and I'm sure you do as well. We want to take the pain and chaos out of your business. This should be something that's fruitful and enjoyable and something that's really fulfilling, not something that's keeping you up at night and, preventing you from enjoying life. So I think that's a big, big value add in this industry, whether you're serving on the CPA, tax and accounting capacity, or the back office support operations type of thing, on all of those fronts. Just have that clarity of what's going on, knowing what your next step is and what direction you're headed in is huge.
Yeah, absolutely. And to kind of tag on to what you said, when you operate in a mode of, well, we're going to get ready for tax season. Well, it's time to do our taxes, so let's pull in such records as we do have and, bring it to our CPA and try to figure it out. Well, then at best, I think you get sort of a rear view mirror look at, well, how did we do all year long? And you touched on tax flow. My brain's not working today. Cash flow, which leads into tax, I suppose. When you don't, well, we'll get to that in a second. Cash flow, payroll, and what my tongue got tangled on a second ago is how that interacts with tax payment is if you aren't keeping up with your profitability during the year, you're kind of driving blind in terms of how much tax do you actually owe. So you're going to tend to get a big surprise. And the IRS and the revenue department kind of like to get their money quarterly, don't they?
Yeah, yeah, especially with business owners. But I would argue it's important to understand, because if you think about it, any small business, real estate, any of that is going to be, I mean, it's an investment. So if you
Yes.
think about it, like, you're not going to just throw your money in some random stocks and, you know, hope they do well. And you shouldn't be doing that with your business where you're just like, you put all this time and money into this business and you operate this business and you just hope it does well. I think having like I said, that clarity, that clear picture of like, okay, what is going on in our business? How does this work? Where are our bottlenecks? Are we making sure that we're creating efficiencies so that we can have a profitable, lucrative business? Because if it's not, we need to evaluate that and sell that stock, get out of that and get into something that is more profitable and more worth your time. Unless it's a hobby, of course, which, whole nother topic. But yeah, when you're in business, you want to make money. You want to
Yeah.
be able to continue to grow and do, continue to provide value.
Yeah. And that makes me think about something. I know we didn't really talk about this in advance, but family business dynamic. You mentioned, purpose of a business is to make money. And a lot of times it's just kind of a family tradition that, well, we operate a business, we've always been in a certain trade, so it's kind of passed down from parent to child and on it goes. And sometimes there isn't really a hard look at the profitability, cash flow, lifestyle advantages and disadvantages of running that business. And to kind of back up, take another run at the things we talked about a second ago, small businesses do tend to struggle with cash flow. And in my experience advising clients, a lot of it has to do with the fact that they're often not capitalized in the same way. They haven't pulled a bunch of investors' money. They're kind of bootstrapped. So cash is often tight, especially either at beginning stages of their business or just when they get into slow seasons. Another thing about small businesses that does tend to make payroll so dramatic is payroll is such a big part of their overall finances. I mean, often, it's true of most businesses. Payroll often tends to be the biggest expense for small and large businesses alike, but it's something that small businesses really feel, and constant concern about, well, are we going to make payroll? And to avoid drama on that, cash flow monitoring that takes place on a really consistent basis is key to avoiding those kind of problems.
I would agree. And, not to just like be here just to hype you up, but, what you do in your business and how you serve clients, I think is one of the most important like precursors to understanding your business further. Because if you don't have good like internal controls or processes and procedures in your business, it's things can fall apart quickly. And I think, which I don't know if it was last week or I know your prior guest, you had an EOS implementer
Right.
on, right? So like
Right.
that is an incredible example of like how important it is in business to have good procedures and just like run your business in a smooth, efficient manner. So I definitely agree with that. And you were talking about like, I like the rear view mirror example you gave about like, whenever you really only touch your finances when it's tax time. If you might know this, but there's like the quadrants. I can't remember. There's like important and urgent. There's
Yes.
like urgency and importance. And so like if
Right.
you're in crisis mode all the time or
Exactly.
just working on unimportant urgent things, then you're kind of missing out on those not urgent important pieces. So I find that like especially people just starting out, they're usually in that crisis mode, just doing what they can to survive and not really planning ahead. And I see that in my own business, especially during tax season. I find myself working in my business a lot more than I'm working on the business, which, that's just kind of the life I chose, I think, being taking the CPA path. But yeah, it's something that like it does hinder growth if you're not able to focus on expanding your business. And, expansion, I use that term relatively like you can expand by growing the business, but I also think expansion includes optimizing your business. The way, like if you want to just keep your business stable and steady, what you need to be doing is focusing on like, okay, how can we be the best at what we're doing and make it run as smoothly as possible? And then eventually, I think the best, an important goal for a lot of businesses should be succession planning as well.
Yes.
Um, because, your business in a lot of cases is your legacy, and you want to be able to let that continue on and serve the community around you and keep your employees employed and keep them working and adding value. And you want to be able to have that opportunity for generations to come. So that's, again, kind of on that same topic of like running your business in an efficient manner and having those policies and procedures in place to make sure we have a standardized way of doing things so that, we're not deviating from our path.
Yeah, to pick up on that for a second, again, thinking about the family business dynamics, I think sometimes people who run a small business, particularly if it has like multi-generational family involvement, they don't think of it as an asset that has a value. They just think of it as a source of income. And so they sometimes don't fully appreciate the opportunity cost for the next generation to take it on. What is, on the other hand, what is the value of that business if it were to be sold? For example, let's say you had a plumbing company. Well, maybe another plumbing company out there might want to buy it. And, if that coincides with your children don't want to run it, well, you may have an opportunity. That may be your retirement opportunity right there. But to take advantage of it, you have to have a set of books and evaluation on that business that you can literally, or your buyer can literally take to the bank and say, this business is worth this amount of money because of the operations and the cash that it's generated and the profit it's generated and so forth. I got to go back and talk about your 4 boxes, because that's a great thing to keep in mind that we all struggle with. So to unpack those 4 boxes, let's go school of management on this for a second. You have your importancy and your urgency. So not important, not urgent, perhaps in the lower left. Well, that's easy enough to ignore, usually, unless it's your mother calling or something. And the things that are important and urgent, well, that's also easy to prioritize in a way. But, the 2 killers are important and not urgent. Or I might even say it doesn't feel urgent, because in the long run, it'll get urgent if you don't take care of it. Like for me, my thing that I tend to let slide is I need to talk to prospects, maintain that funnel, if you will, of prospects that might want to do business with me. But that always feels less important than taking care of current clients. That's, in a way, that's the way it should be. But on the other hand, you've got to make time for both. And then there's urgent but not important, which is really interesting because, when the phone rings, that always feels urgent, right? We have to guard our time with things that just come along and somebody's demanding something like right now, but it's not strategic. It's not important. Obviously we got to care for the people around us and so forth. But at the same time, we really have to watch our time, because particularly when you're self-employed, a lot of times people just think you don't have a job and you can just do anything that they come up with for you to do at any given time. Well, I'll say one more thing. Again, I'll just say, and by the way, thanks for the plug a while back. I'm willing for you to hype me up anytime. That's great. But look forward to working together. I wanted to talk about 2 things that maybe are less direct about your CPA practice. And I'll start here. You are you're not just a Nectar Bridge partner. You are even more big time, a Bigger Pockets Pro and a Ramsey advisor. So talk about those 2 affiliations or partnerships.
Absolutely, absolutely. And I don't want to overstate, my like popularity. I am, I'm not going on the Ramsey show or anything like that. But really, so the Ramsey program, the Ramsey Trusted Pro is what it's called. And they
Right.
essentially, what that is I go through a process with Ramsey Solutions. So if you're familiar with Dave Ramsey, they have the baby steps, and their whole program is about getting out of debt and following like true to life financial principles. I want to say, and I know Dave's always saying like, oh, it's common sense financial principles, but you look around us in America today and you see like the debt problem we have and the debt problem that our government has, and it's like maybe this isn't common sense. And so, yeah, it's just, getting back to basics, getting your financial situation in order. And then my favorite people to work with, because I mean, of course, I love helping everybody, but they have a show called Entree Leadership geared towards a similar group of people who are watching this. It's like business owners who are trying to grow and they want to do it in the right way. And so those are great clients to work with. But anyways, they take me through this process where they interview me and they look at like what my prior experience looks like, and they bring us on as basically trusted pros where they can send clients to. So they make sure like we're aligned with the same principles. I go through this training program. It's similar to FPU, Financial Peace University. And so I get to go through all that, and they send me clients that are looking for tax help. And it's a wide range of clients, but it's always cool to kind of hear everybody's story and hear about like where they are in the baby steps. And, if they have a business, what does that look like and how did they grow? Because a lot of times people think it's really hard to grow a business without debt. Either like you're sacrificing a whole lot of time, a whole lot of your own money, or you're taking out big debt and you have to worry about that, or a combination of that. So it's always cool to hear people's like alternatives to that. And then on the flip side, so the Bigger Pockets, that's a real estate podcast, and they have a huge community and forums that go crazy with information. I love jumping in the forums and posting and chatting with people. That community is fantastic. It's all real estate investors or real estate related professions. And it's kind of a similar thing. They don't really have like strict values the way Ramsey does. And actually, I get a lot of people through there that come through, and, most real estate investors are very like debt friendly because leveraged returns,
Yeah.
along with like the tax benefit of like depreciation and paper losses and all that, is
Right.
going to be what makes real estate a very attractive asset class. And you have the control over it and stuff because you can do leverage returns with like stocks, but it's a lot more risky. So I get a lot of people in there that are levered to the max. I think, especially in real estate, it makes sense to carry
Yeah.
debt at times, but I think that those people have a lot going on with, especially complex debt structures like that. A portfolio loan, there could be a lot of moving parts. They can get really complex. So I feel like I'm able to help add some value there, kind of simplifying something that's can look really daunting when you're not really in that stuff. So that's my long-winded answer of kind of how I serve those markets, but it's really just about getting involved with those different communities and being able to provide value to them in a way that's like very specific to their set of problems that they face in their jobs and stuff.
Okay, great. And yeah, I appreciate the long answer. I am no expert on the topic of debt and how much you should have and so forth. So I'll try to avoid pontificating here, but everybody who knows Dave Ramsey at all knows he is extreme on this topic. Like, he basically believes that ideally you should not owe anything, never borrow anything. And the one concession I believe he'll make is like personal home mortgage. And that is, as you say, that's kind of contrary to the way most people in real estate operate. It is very difficult to start buying houses for investment without taking on any debt. You mentioned in being a Bigger Pockets pro, I have listened to that podcast. I believe you're the person who put me onto it. And one thing I do appreciate about them is they are very realistic about the danger of debt. They are not like your go, 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 don't worry about it, borrow as much as you can. And I'll say one more thing about debt. I am, as everybody who knows me is getting tired of hearing about, I am finishing up an MBA. And there is a class that MBA students frequently take toward the end of their curriculum, and like a capstone class. And you use this software called CapSim. And it is a software environment where you go through, in my case, 8 rounds of developing a manufacturing company. And it's all quantitative stuff. Like, you can turn financial knobs, basically. And one of the things that they will tell you when they are showing you how to do this simulation, and in fact, I think the teams, we were the 3rd best out of 8 teams, I think. We just wrapped it up today. And It means nothing. I get no actual money. I get a grade. But they will tell you in the lectures, in the coaching on the simulation, they will tell you borrow, borrow, borrow. And it's like, okay, that's cool. If it's a simulation where everything is so cut and dried and there's no way that the market's going to like get cut in half, or we're not going to have tariffs, or nothing crazy is going to happen, like never happens in the simulation. They said that there would be like economic conditions that might change from round to round, but I didn't find that actually materialized. So if I get started talking about CapSim and how frustrating it was, I won't ever stop. But that,
I actually loved our capstone class. We had a similar thing. It
yeah.
was like a drone manufacturing
Oh, okay.
simulation is what we did. But I thought it was pretty cool. I got way too obsessed with it. I had a friend who was way
Yeah.
too obsessed with it, and they were really into it. But you're right, it's in a vacuum, and that's not the
Yeah.
world we operate in. So
Correct.
sometimes it feels like, we can turn these knobs in our business, like there's some things we
Right.
can, but there's other things at play that affect what the actual outcome looks like. And you're right, absolutely right with debt. I see both sides of it. I get the
Yeah.
whole Ramsey approach where it's like no debt because there's no risk with that. But when, especially in real estate, like I said, levered returns is like, 80% of why you do it. Because,
Yeah.
your cash on cash return can be, you know, 20%. Whereas if you're investing like in stocks and you're not using like margin or anything,
Hmm.
your dividend yield would be like 5% on the high end. And when you compare that like difference on cash flows, it's like no brainer. And plus you have the appreciation of real estate, which again is leveraged
Yeah.
5x most of the
Right.
time. So yeah, I see both sides of it. I've been on every which way of it. I've been totally debt free. I've been invested in real estate with debt. And so I've kind of seen every side of it, and I get everybody else's approach is going to be different.
Okay. So let's walk on a little further into real estate strategy, because you have a real estate license yourself, right?
I do. I don't really sell much real estate now, but yes, I do carry a license, and I really like it for especially the CPE stuff to keep
Right.
myself educated and such.
So talk about real estate investment. We've already talked about the debt aspect of it, but just in general, what are some things that you would want real estate investors to know? What would be the value of them coming to you as a client?
So as far as real estate investing goes, most of the time, like if you're just getting started, I think learning from people in your community, and especially here in Huntsville, we have the Madison County Real Estate Investors Association. It's one of the biggest, I think it's the biggest real estate investor association in the state, and it's one of the biggest in the US, if I remember correctly, but they're huge. And
Yeah.
I think community, and same with Bigger Pockets. It's an online community, but community and learning from others, it will take you to the next level so much quicker. When I started out investing in real estate, I was fresh out of college and I was just like, I know I need to get into this because this is going to be the most efficient path to the wealth goals that I had set for myself. That and starting my own business. I knew that early on. So, but I didn't really have a mentor. I didn't have really anyone guiding me.
Yeah.
And I just started an investment company with a couple of friends and we just kind of dove into it and we learned some hard lessons. And I see that a lot with other people. So I think getting involved in your community of other real estate investors is super, super important. That's how you're going to build your team. That's how you're going to find the agent you want to work with. That's how you're going to find your contractors. That's how you're going to find your property managers and insurance people, all that. You're going to get connected to people that way. So that's my number one tip to real estate investors who are starting out. Now, why is it important to get involved with a professional like CPA, especially whenever you're starting that journey? Things can get messy and things can get
Yeah.
complex, and there's a lot of tax advantages to real estate that can go untapped or can be, you can get into it and realize like I'm not fully exercising the opportunity I have here. So, there's things like being able to take the passive losses against your active income. There's certain strategies you have to take and steps you have to take to be able to do that. Because if you have, a $20,000 loss on paper for taxes, it's going to be much more advantageous for some people in certain situations. It's going to be more advantageous to take that against your W-2 income if you are
Right.
working a W-2 job, or your business income, rather than carrying forward that loss. So it's, without getting too specific, because everybody's situation is different, it's all about like taking advantage of the opportunities that are before you. Are there some people who can, go on TurboTax and file their tax return with Schedule E, no problem? Absolutely. But I know from my experience reviewing returns, whenever I bring on new clients and stuff, I see that, half the time these people might not be doing something correctly, and or they're missing out on opportunities. And I think that peace of mind that it's being done correctly is another huge value. That I think we were talking about that last week or earlier this week about, some people are willing to pay a lot of money for services solely on the reason that they know a professional is handling it.
Yeah.
Because it's like, if someone could go file a tax return for $100, like say it's a simple 1040, and they go file a tax return for $100 or whatever it is nowadays on TurboTax, it's probably more than that. And then they come to me and they're like, "Yeah, I'm willing to pay, 3 times that because I did it on TurboTax last year and I started getting all these letters and stuff was wrong. And I want that peace of mind that I have a professional by my side getting this done, getting it done correctly. And if there are
Right.
issues, we can address it. We have kind of the tools at our disposal to handle anything that comes up." So I think that's probably the most important thing, because especially in real estate, like I said, it gets complex. Depreciation can get messy. What you claim bonus depreciation on can get messy, because I've seen a lot of people. So there's a concept of qualified improvement property, and that's going to be related to like a commercial real estate property. If you do certain improvements, you can take that over 15 years and you're
Right.
eligible for bonus depreciation or 179 expense. And so you cannot do that with a residential property. And I've seen so many times people come to me and I see their prior depreciation schedule and they're like bonusing out stuff that absolutely should have been depreciated over the full 27 and a half year useful life. So they're taking big depreciation early on that really wasn't allowable. So it's just like one example, but there's so many things out there, like little nuances that in the tax software you see, oh, improvement, I should select that. That's right. But in reality, you have to understand what is a qualified improvement property, like what qualifies it to do that. So things like that I think are super valuable. Yeah, you should always get connected with a professional. I think if you're ever getting into real estate business, anything outside of just a W-2, you should probably be getting connected with a professional, because that peace of
Yeah.
mind is super valuable.
Absolutely. And it's kind of like the proverbial rock on the one hand, hard place on the other. You have, I think a lot of times people view risk of overcooking their deductions as, well, I might get audited. And they view it as kind of like an unlikely event. And I guess a full blown audit is somewhat unlikely. But if you, first of all, it's very statistics based these days. So if you put something in your return that's outside a norm, first of all, you've really increased your chances. But also, you mentioned like getting the letters, getting the forms. They don't really have to audit you to have a mistake on your return end up getting a letter kicked back to you. You got to fix this. You've got a lot of complications. So that's the rock. And then the hard place is if you miss out on legitimate deductions or ways to pay lower rates on income, and you're actively involved as an investor or a business owner in real estate, so on, you can really cost yourself way more than what your bill is going to be. So with that, as we start winding it up, I always like to ask, what questions do you wish I'd asked you?
I had a good one lined up. I want to bring this up. I would say the only question that I think would have been good to ask, just because it's good to discuss, is, what is the most common question that I get as a CPA? Because if I can share that here,
Yeah.
you got your question answered. And I think the most common thing I get is, what's the most effective way to reduce my tax liability? And
Yeah.
I would argue that having a business, running a business, and investing in real estate is number one. And when you're investing in real estate, especially if you have other active income, you want to qualify in some way to reduce your active income by that passive loss. And so the main ways to do that: real estate professional status, short-term rental loophole, and then there's a certain exclusion based on income. If you're below, I think it's 150K, if I remember correctly, for married filing joint, you can take up to 25K in losses against your active income. So if you fall into that category, easy peasy. You just want to make sure that you're like actively participating in real estate, but that's a great one. The real estate professional status, there's a lot more to that, and I have some resources that will help kind of like make it a little easier on like what do I need to do to qualify for that. So I'm always happy to share that with anybody, and I can share that with you if you wanted to include that. But another piece is the short-term rental loophole, which again, I don't like the term loophole because it sounds like we're doing something wrong. But it allows us to basically treat it like an active business. And again, you need active participation in it. But yeah, that's the main ways that I see people take advantage of that. And then with businesses, you can expense to, some limitations, of course, but any legitimate business expense is going to be deducted from that income. And so if we're, again, with limitations, but I think a lot of people, because I see high earning W-2 workers, they're not able to take advantage of as many tax planning opportunities because a lot of it's geared towards self-employed people, which again is because the tax code is used to incentivize certain activities, and we want to incentivize businesses and innovation and such. So yeah, the biggest ways to save money on taxes are to have a business. So if you have something you're doing that can be a legitimate business and you're thinking about taking that leap and you want to save money on taxes, that's a big opportunity. And then again with the real estate. So that's kind of my main answer to that question that you could have asked.
Great. Well, and I wanted to mention one other thing too. You and I are both in two different locations of Coin Co-working. So I wanted to give a shout out to Will with Coin Co-working. We both have offices. Mine's in the Lincoln Mill location on the second floor of the Lincoln Mill building, and James is in the one off of, I believe, Washington Street, right? So, Yep. So this has been the Nectar Bridge Huntsville Biz Talk podcast. And James, I appreciate you coming on. Hope to talk to you soon.